Greetings, members one and all of the Salivation Nation. The second largest bank is agreeing with me that we're going to see prices for gold and silver go up by the end of the year. BAML, which is Bank of America Merrill Lynch, sees gold at $1,400 by the year's end, and silver close to where I think it will be, although I'm a little bit more bullish on silver than they are. It is also not changing the forecast of their gold and silver. I guess they had made a prediction before. They believe that gold will be about $1,400 an ounce, and silver will be at around $17.50 an ounce in the final 3 months of 2018. However, I have predicted that I think that we're going to see gold at just below $20 an ounce, maybe even a little bit more. The bank said in its report that growing geopolitical tensions, escalating global trade wars, and rising inflation pressures will remain supportive of the precious metals. We note that the business cycle is maturing and the ongoing uncertainty around trade is not helping at this junction, the analyst said in the report. At the same time, inflation has been picking up. Shorting treasuries is one of the most crowded trades, a combination which may ultimately bring gold buyers back into the market. The bank's forecast came as gold prices pushed to a new 12-month low at the start of a shortened trading week. Silver fell to a fresh 7-month low. August gold futures settled Monday at $12.4170 an ounce, down 1% on the day. Meanwhile, September silver futures settled in at $15.83 an ounce, down nearly 2% on the day. The analyst said that the U.S. dollar remains the most significant risk of the precious metals market. The U.S. dollar index is trading near a one-year high at 95.05 points. Looking ahead, the analyst said that they see further room for the U.S. dollar to rise against the euro, which has the biggest weighting of the dollar index. BAML sees higher U.S. interest rates driving the U.S. dollar higher through the rest of the year. The dollar index remains at 8 to 9% cheap relative to medium fair trade value, a fair value, the analyst said. Fiscal stimulus is driving U.S. growth higher relative to the rest of the world, where growth is sputtering. The market is still priced well below the Fed's projected rate path through 2020, which provides potential for the U.S. dollar to strengthen on U.S.-specific factors. While global trade issues remain a threat, the analyst said that the U.S. economy is in good shape to weather the storm. Now, with that being said, with the fall of the prices yesterday brings us to today's prices, and gold is up $11 from yesterday, and silver is now right at $16 as of the recording of this video, and platinum has rebounded some, with palladium falling off a little bit, but still well above platinum. Gold and silver prices are moderately higher in the early U.S. trading Tuesday, and this was recorded earlier, on some short covering in the futures markets and perceived market basement buying in cash markets. Gold hit a 12-month low overnight, and silver scored a 6.5-month low on Monday. The key outside markets are also bullish daily posture for the precious metal markets today, as the U.S. dollar index is lower and crude oil prices are higher. August gold futures were up $7.10 an ounce at $12.4880. And July COMEX silver was up 14 cents at $15.98 an ounce. Now it's at 16. Reports overnight said Monday's trading in gold exchange traded funds saw the largest outflow of money from those funds since late March. Gold and silver bulls remain stymied by their metals' inability to rally in the face of the threat of global trade war and some fresh instability in the European Union. World stock markets were mixed to higher overnight. U.S. stock indexes are pointed towards higher openings when the New York day session begins. European stock markets were astonished today on news that German Chancellor Merkel has apparently avoided a political crisis by coming to an agreement with other German lawmakers regarding immigration laws. In other overnight news, the Eurozone's producer price index in May was reported up 0.8% from April and up 3% year on year. Those numbers were a little higher than expected. The U.S. Independence Day holiday is on Wednesday, which is tomorrow, which is likely to make trading in the U.S. light today, especially as many markets close early today. However, some important U.S. economic data is out later this week, including the Fed's FOMC minutes on Thursday and the jobs report for the Labor Department on Friday. The key outside markets today find the U.S. dollar index lower, but still not far below the 12-month high hit last week. Meantime, NYMEX crude oil prices are higher, hit a 3.5-year high, and trading just below $75 a barrel, and those two things are what made the metals go up today. U.S. economic data due for release Tuesday includes a weekly Goldman Sachs and Johnson Redbook retail sales report, the ISM New York report on business, manufacturer shipments, and inventories. So there we go. We see the 24-hour spot gold price there, and go into some more technical analysis, which we've kind of reviewed in prior days, but we shall see what happens. There you have the tops and bottoms, the floors and ceilings, and where the resistance is seen. It'll be quite fascinating to see where things go from here. And as always, as I mentioned, it's fun to kind of just see where things are, what causes the markets to move the way they do. A lot of it's psychology. We hold and we buy because we understand the true value of these precious metals and what they're for, that they are insurance policies, essentially, against economic instability. And we are overdue for a recession, and so that could be coming sometime. But I'm still bullish on the precious metals by the end of the year. I think that even if the economy does well, I believe we'll see gold and silver creep up some. So post your thoughts below. I would like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.